Okay, we're seeing a recovery of Bitcoin and we're seeing a recovery of the markets, and that is just one day after Russia invaded Ukraine. We're seeing the recovery of Bitcoin close to $40,000, which is exactly the point of max pain on the options expiry, which happened today. Is this all a coincidence? Well, that's what we're going to look at today. I'm also going to show you why I think that even though we did get an invasion on Ukraine yesterday, that may have been a catalyst for a super cycle. Now, this is not clickbait, but I'm going to show you the data that shows that if a few domino pieces fall in line, then we could get this Bitcoin super cycle. It's a super interesting theory. Initially, I was skeptical when I heard it, but then I researched it, and it actually can be true. So let's do this. It's going to be a big Friday, and then we're going to do some call-ins. We're going to do some call-ins later today because today is Banter Friday, and that's when you guys call in. Let's go. Yo, Banter fam, welcome back. I'm Crypto Man Rand. I'm here 2, 3, 4 times a day bringing you crypto love and crypto wisdom. And today I've got a major jam-packed show for you. On a day when Bitcoin is recovering, and it's recovering very much close to the point of max pain on the options closeout, which actually happens today. So today is the last Friday of the month, and every last Friday of the month we get the big options closeout for Bitcoin. And on that day, we do get usually to the point of max pain, and that's the point where bulls and bears suffer the most. It's the point of max pain on the options market. The point of max pain was $40,000, and I think yesterday no one thought that we could ever get to $40,000, and here we are, very close to $40,000. We're going to talk about why the price went to $40,000 and why I believe that we may be going into some kind of super cycle. So if you're new to the channel, welcome. Subscribe to our channel, join the movement, join the most loyal crypto community in the world. We're here in the good times and the bad times, and we degen a lot. In fact, we even degened yesterday. When Fred told me yesterday, Fred said, listen, he said, don't talk about buying, don't talk about the bottom. And I said to him, Fred, today is the day when everyone should be buying. But Fred said, don't talk about buying and don't talk about the bottom. And I said, Fred, we got to be buying today. We have to be buying today. Today is the point of panic. And what did Fred say? Fred, what did you say?
Fred told Run to not buy. I'll be honest. Yeah, you were right.
What did Run do when Fred told him not to buy?
Run bought lots.
Yeah, but you told me not to tell the community to buy because you said that if I tell the community to buy, on the day when
I said, let's be delicate. I think I'm an emotional guy. I should have bought more.
You said, and I quote, actually, I'm going to get the quote here. You compared me to Bobby Axelrod, and you said, if you tell people to buy on the day when Russia invades Ukraine, you are like Bobby Axelrod making money out of 9/11.
Yeah, the pariah.
That's what you said. You said it. I should have listened to my instinct. It
was Tommy, but I agreed. You're right. I should have bought more. I don't feel good about it. I am feeling the FOMO.
I aped.
You did.
And I continue to ape today. I told you guys what I aped into. Finally, I got a buy on Credo. I aped into Credo just under $2 yesterday. I aped into Moonbeam because I haven't got enough Moonbeam in my portfolio. Tornado Cash, I managed to pick up some more Tornado Cash at $29. And I'm still buying, and I'll show you guys later on today what I'm buying. But more importantly, I'm going to show you why it is that I'm buying. Why am I so bullish today? And I'm not saying it's going to be a quick recovery, but I'm going to show you a thesis for why the Russia-Ukraine invasion may actually be, I'm not going to use the word blessing because you can never say blessing about what's going on there. I saw some horror stuff today. Actually, if you give me a second, I'm going to try and find this horror for you. But when I saw this, I've got kids, and when I saw this, I wanted to break down. I've got to try and find this for you. It was a tweet that Freddie, the emotional guy.
Yeah, that was my tweet.
Will you drop it in the research group, Frederick?
Sure.
Okay, so Freddie's going to drop it first, and I'm going to show you guys a video. And this, when I saw this video, wow, I was yeah. Whew. Whew. Let me know when you've dropped it, Federico. Let me know when you've dropped it. Yeah, so I'm going to show you guys. It's in the research group. Okay, let me quickly just find it. Let me go to the research group and just. I don't see it, Frederick. Fred, try and send it. Maybe if you could send it in a direct message. I'm going to show you guys a few other tokens that I bought as well, and what I'm buying right now. I have made a couple more purchases. I bought some more Luna yesterday. I paid just under $60 for Luna, which I think was a steal. I think especially now because Luna's probably going to go and do it. Let's see if we can get it. Let's see if Freddie sent it to us. Oh, here it comes. Here it comes. I see it. Okay, so. This is the tweet that I saw this morning, and this was after the Ukraine. I don't know if this is true, where they said that certain adults can't leave Ukraine, specifically males can't leave Ukraine. And we saw this video, and again we can't vouch for the authenticity, but what it says is a father saying goodbye to his daughter as he puts her on the bus to safety and he stays behind to fight for Ukraine. If you've got kids or if you're a sensitive viewer. Comments. Yeah, no, those wartime scenes just make everything just feel, every portfolio, every move in the Bitcoin price literally feels so trivial, so trivial. But that's the reality of it. But I want to show you today why I think that the attack on Russia and Ukraine may actually be good for markets. I'm going to show you a few scenarios as to why this may actually be good for markets, as well as much as a war can't be good for anyone. I'm going to show you a few things. The first thing that we need to look at is we look at the indices today, and the indices are pretty much all in the green. You got Bitcoin up a lot. Bitcoin is 39,000. It's up 2%. Bitcoin is not the only index that is up. You've got the US indices. You've got the US NASDAQ tech index up about 1%. And remember that yesterday this index was up 3%. So you can see that yesterday this index was over here. And I guess the reason for all of this is that the market finally got clarity. You know, markets don't like uncertainty, and the market finally got clarity. Russia invaded Ukraine. The US responded. The US responded with a whole lot of sanctions. They were quite firm in their approach. They were united with their allies, and they set out very specifically what kind of sanctions they wanted to do. They cut off Russian funding. They cut off all assets owned by Russian companies outside. They cut off many other sources of funding to Russia. But they stopped short of sanctions against Putin himself, and they stopped short of cutting Russia off the SWIFT system. We'll talk about why that is such a big move a little bit later. But ultimately, the world got clarity. The world got the invasion, and the world got clarity. And we spoke about it earlier in the week. We said, usually what the market doesn't like is the market doesn't like uncertainty. And when you finally get certainty, that's usually a turning point. And we've seen that with many other crises in the world. We've seen that as a turning point. And I think that yesterday was that panic day. Yesterday was the panic day. And you can see that because if you look at the price action yesterday, you got a whole lot of volume over there, which we haven't seen volume coming into the market for long periods of time. And you've got this wick that Sheldon spoke about, which is this emotional wick where the markets go down and they go and recover. And the last time we saw one of those was in the COVID crisis. And we see these every time there's a crisis. So we finally got that. The markets finally got their point of panic, and they got their point of clarity. And now the markets have their clarity, and investors can now continue to invest. And that's why we saw a whole lot of markets recovering. We finally got that panic day. What we also see is that there have been very few times that we've actually had a situation like we had yesterday. Yesterday we had the NASDAQ down 3% in the futures, closing up 3%. So you almost had like a 6% recovery. Where in the past have we seen those? Well, we saw this in the housing bust, and specifically we saw this in the housing bust on the 8th of September. And that is when the market recovery from the housing bust actually started. So you can see over here, 16th of September, 2008. We saw that in 2002, and that was after the dot-com crash, and we saw it today, or yesterday. So it was a very significant day yesterday in terms of market sentiment, where you had the market going from extremely negative to extremely positive. And that happened very, very, very quickly. So that is a big sign of a investor market recovery. We've only seen that very, very, very few times. Okay, what does this actually mean? Well, what you're seeing is that for a while, the bears have been in control. So you can see that in terms of investor sentiment in the United States, the bears have pretty much been in control for a while now. And the investor sentiment has been so negative in the United States that we're almost in situations that, we look in other crash situations. So look how many times in the past we've been in situations where historically we've had this kind of sentiment. And what this tweet says by Julian Bittel, who's a CFA, I don't know why CFAs always say CFA. I'm a CFA, I don't write CFA next to my name. We're getting close to something big. The bears have been in control, but the balance of power could be shifting. Sentiment is very bearish. Bull versus bear, lowest since April 2020, which was COVID, remember, COVID. Historically, these kind of extremes have always resulted in strong rally. So again, we're seeing a complete change in sentiment, and we potentially could see a strong rally. And I'm going to show you now why I think that yesterday was that panic day, and now we can actually see an amazing rally. And this rally may actually turn into a quite an extended super cycle. So let me show you why I think that may be the case. I am a CFA. People are let me tell you why I think that may be the case. But first, guys, smash that like button. We do need to get 3,000 likes. If we do get 3,000 likes, we start giveaways again today, right? Sounds good. We have a whole lot of. Don't we have Luniverse that we want to give away? There were. Okay, amazing. All right, so let me show you why I think that yesterday may have been one of the turning points. And I think the thesis starts off by asking, what is it that markets have been scared of? So if we go back to Bitcoin and we look at Bitcoin, and Bitcoin is pretty much a reflection of the markets. But you look at the markets here, this here is the point where Evergrande initially announced that it may default. What is it that markets have been so scared of and that has sent markets going down all this time? What was it? Well, there are a couple of things that have been scaring the market. The first thing that's been scaring the market is inflation. The market has been shit scared of inflation. The inflation numbers in the States have been going up, and they know that the Fed has to increase interest rates. And as the inflation numbers continue to go higher and higher and higher, so the concern is that the Fed would have to increase interest rates faster and faster and faster. And if the Fed has to increase interest rates faster and faster and faster, it does mean that they're going to push the brakes on the economy. So that's the first thing that scared the markets. The second thing that scared the markets, which also started around about here, was the Russia-Ukraine invasion. So that's another thing that has scared the markets. The third thing that scared the markets was Evergrande. And Evergrande started over here. So if you look at the date where Evergrande announced, or where the announcement was that Evergrande may be defaulting on its debt, it was just at this point over here where Bitcoin was at about $67,000. I won't forget that because I was at the Solana conference. I was in Lisbon when we read that announcement, and I remember thinking, what is this? And I think I did a live stream back then. So that's the third thing that scared the markets. And the fourth thing that has been scaring the markets is China invading Taiwan. Now, China invading Taiwan hasn't been a big fear for the markets. It's always been something in the background. So 4 things scaring the market: inflation, Russia-Ukraine invasion, China invading Taiwan, and the Evergrande default. Those are the 4 things that are scaring the markets. Okay, so now let's look at where we are now. So let's look at where we are now. Those 4 things have brought the market down, all the way down from here to here. Now, we've had Inflation numbers are at an all-time high. We got inflation numbers at an all-time high. We also got expectations of Fed rate increases that are going to be the highest, that the most aggressive rate increases. We understood that the Fed was going to increase interest rates pretty aggressively, 0.5% in March, and probably by 1% before July. So the market got their clarity that the inflation numbers are high and that the interest rates and the Fed tapering would be super aggressive. We'd get a super hawkish Fed. That's what happened. That's the resolution around inflation. Then Evergrande is pretty much defaulted. So Evergrande has defaulted, and it is what it is. They have defaulted, and it seems to be a contagion which is being managed very closely in China. So that's off the table. Inflation's off the table. Evergrande is off the table. Then Russia-Ukraine invasion. So up until 2 days ago, there wasn't clarity as to whether Russia would invade Ukraine. Now we have clarity. Russia has invaded Ukraine. The West has responded. How have the market has clarity? Russia is not holding back. It is invading Ukraine. And the West have they've been clear about how they're going to continue to fight this war. They said the following. They said, look, we're going to have sanctions. The sanctions are going to be financial sanctions. We're going to cut off funding to major Russian institutions. But Biden says that the US forces will not fight in Ukraine. So we know for sure now, the market knows for sure that the US is not going to fight in Ukraine. They are going to freeze assets of Russian oligarchs around the world. They're going to cut off funding. No more buying and selling of bonds of Russian institutions. So really to squeeze Russia using these, what Joe Biden called yesterday in his speech, he called these unprecedented sanctions. So that's how the US is going to be responding. They stopped short of SWIFT. So they're not going to cut Russia off the SWIFT system. And we know why they're not going to cut Russia off the SWIFT system. The reason why they're not going to cut Russia off the SWIFT system is because if they do, then the Russian companies that owe German companies and other NATO countries money won't be able to pay it. So cutting Russia off SWIFT, whereas it's a very intense kind of sanction, probably isn't a viable or feasible sanction now. So the markets have got their clarity when it comes to Russia and Ukraine. Cool. So clarity in terms of inflation, clarity in terms of Russia and Ukraine. China as yet hasn't invaded Taiwan, although we did hear that, I don't know if you saw this, but this is crazy. China is rejecting calling Russia's move on Ukraine an invasion and urged all sides to exercise restraint. This was yesterday. It's as if they don't watch Western TV.
You are using the typical Western media questioning method of using the word invasion. China is closely monitoring the latest situation. We call on all sides to exercise restraint to prevent the situation from getting out of control. We believe that under the current situation, all parties should exercise restraint and ease the situation through dialogue and consultation. Spillover effects of all kinds can only...
So China is basically saying that this is not really an invasion, whereas Taiwan has come out and Taiwan's basically said, look, they condemn Russia's invasion of Ukraine. And yesterday we received reports that 9 Chinese aircrafts or aircraft fighter aircrafts moved into Taiwan. They flew over, but apparently they flew out. So there are heightened tensions. So we know about inflation. We know about Russia and Ukraine. We know that Evergrande is defaulted, and so everything now the market has their clarity. But here's where I think it gets interesting. Here's where I think we may be setting ourselves up for a super cycle. Before yesterday's invasion, not only did the market not have clarity, but there was something else that happened. Before yesterday's invasion, we believed that, or the consensus was, that the Fed would be pretty hawkish and pretty aggressive in their tapering, that they would stop putting money into the economy and buying treasuries round about March, and that they would start increasing interest rates also round about March to start curtailing the inflation. However, since Russia invaded Ukraine, it would probably be irresponsible of the Fed to start exercising or to start increasing interest rates aggressively. In a time like this, the last thing that you want to be doing is increasing interest rates aggressively. Okay, they won't do it. They can't do it. It would be an irresponsible policy. So maybe because Russia actually invaded Ukraine yesterday, the Fed will have to slow down on the interest rate increases. And so what you're getting already is you're getting a completely new narrative in the media. So listen to what's going on in the mainstream media at the moment around inflation.
What would you anticipate the next move being from the Fed in that case?
So this takes 50 basis points completely off the table. It takes the 8-9 hikes that a lot of people were talking about for this year off the table, and thankfully so, because you heard me say on your show that I didn't think the U.S. economy could accommodate and live with such slamming of the brakes of monetary policy. It means the Fed is going to have to be even more careful, and it's going to have to tolerate higher inflation. Nobody wanted to be here, but we were already far away from the world of first best in terms of monetary policy, and now we're going to get even further away. So we're gonna have a very sort of unsatisfactory situation when it comes to inflation and when it comes to growth, unfortunately.
So you're now getting a narrative that the Fed actually can't increase interest rates by 0.5% because of the Russia-Ukraine invasion, they can't do that. Now, if the invasion of Russia and Ukraine continues for a couple of months, it would mean that the Fed would have to be very responsible and completely slow down their increasing of interest rates. Now, what that would do is it would make the US economy continue to run or go back into growth stock mode. And you saw that yesterday. When the market realized that is when the biggest bounce happened, and the biggest bounce actually happened in the NASDAQ. The bounce didn't happen in the US 30. The bounce happened in the NASDAQ. That's what happened. I see we got Jake the Sniper back in the comments. And now he's put on his big boy pants. Well done, man. Well done, Jake. Well done. Well done, well done, well done, well done, well done, well done. Okay, so the recovery happened immediately in the tech stocks, the growth stocks, because what the market realized is that, hold on, if this happens, the Fed can't increase interest rates. The next thing that happened is, the next reason why I think we could be getting into a super cycle is because Russia invaded Ukraine. And when Russia invaded Ukraine, what we saw is that the US put sanctions onto Russia. And these sanctions caused commodity prices to shoot through the roof. So what we're seeing is we're seeing an increase in the price of oil. Oil's gone from $65 a barrel and is now at 91. Remember, yesterday, oil was at nearly $100 a barrel. But that's not the only commodity. If we look at the commodity charts from yesterday, most of these commodities are slightly down today, but all of these commodities are up a lot in the last 6 months. I want to show you just some examples. That's the wheat price. And if we take the wheat price in the last 6 months, it's almost up 50%. And all of these items are the same items that cause inflation. So if you get a high oil price and you get a high petrol price and you get a high gas price and you get high wheat prices and you get high food prices, well, effectively, what you're going to do now is you're going to get high inflation. So we're in a situation where we're going to get very high inflation, and the Fed can't slow down the inflation by increasing interest rates aggressively, because you can't do that in a period of instability. That's what's happening right now. So what will that do? That will cause a repricing in assets. It's like assets repriced when they input money into the economy. We will now get assets repricing again. And that repricing will send stocks higher, and it will send Bitcoin higher, because Bitcoin responds well to high inflation. So another reason is, so not only is it that the Fed can't increase interest rates, but now you're going to get higher inflation, and higher inflation in this case could be good, and it's not good for anyone because people suffer, but it is good for the Bitcoin price, because higher inflation will drive and reprice a whole lot of assets. So that's the next thing that's very good. What else? I also think that, let me see, there was a whole lot of other stuff that I wanted to show you guys. There's also a reason why Putin is not really that scared of sanctions, or not really showing as much fear of sanctions. What you got to remember is that as gas prices go up and oil prices go up and gold prices go up, remember that Russia is a massive holder and a massive exporter of all these commodities. And right now, the West, like it or not, cannot cut off its reliance to Russian gas and Russian oil and many other Russian commodities. The West can't do that. And as these prices go up, as the price of wheat goes up, as the price of gold goes up, as the price of gas goes up, the price or the net income that goes into Russia when they export all of this, and they have to export, I showed you yesterday, to Europe, well, that's going to bring in more money to Russia. So this is like the perfect cocktail. And the last part of the cocktail is, or the last two parts of the cocktail are, one is that the Bitcoin price has gone down a lot more than the price of a NASDAQ. If you look at where Bitcoin's come from, Bitcoin is at about 50% or 60% of its all-time high. The NASDAQ is probably 10 or 15% of its all-time high. And so if this happens, then Bitcoin has a lot of catching up to do. And that's another one of the factors. The last factor, the last factor that I want to show you guys is this tweet here by Willy Woo. And he says, Bitcoin is a risk-on safe haven asset. Gold is a risk-off safe haven asset. Bitcoin as an untested theoretical safe haven, this year will be the first proper market to test it. In a wartime scenario, risk-off is the first market response. The second market response is towards safe havens. So we had a risk-off. Now they're starting to move to safe havens. And if that happens, people may move to Bitcoin. So that's why I think that even though the Russia-Ukraine invasion may have been, it's terrible, it's negative, I think for markets, we may see a whole lot of inflation. The Fed won't be able to increase rates, which means we'll continue to go into growth stocks. For now, Bitcoin has been priced like a growth stock. And I think we may get some kind of rally as a result of the fact that the Fed can't increase inflation. And also, we're going to get inflation, and inflation is going to reprice all the assets again, like we had in the last couple of months. And we saw what happened in the last couple of months. Every single asset had to reprice itself. That's what I think. Let me know what you think in the comments. And let me ask Alex Mashinsky what he thinks of what I just said. Alex, how are you, my friend?
Hey, Ron. How's it going?
It's been a while. We're doing very good. How are you?
You only invite me during market bottoms. You know, when the market really bottoms, that's when you invite me. Last time we were at 29,750. And
you know what? This morning we were on our research call. We have a daily research call with the smartest research minds in the world. And they said, the last time Alex Mashinsky called it exactly, and you haven't given him enough credit. You haven't brought him back. He said the last time Alex called it perfectly. So here you are. You're back. And this is quite interesting for me because if I'm not mistaken, you're of Russian descent, right?
I was born in the Ukraine when it was still part of the USSR. So all the events are obviously dear and near to me, and still have friends there. And we actually have Celsius has several employees in Ukraine that we are trying to get out. I think we got 2 out of 4, and but obviously bad situation over there.
Amazing. Alex, well, there's so much to talk about. First of all, what do you make of the Russia-Ukraine invasion, and what do you make of Putin's motives for this Russia-Ukraine invasion?
Yeah, look, I agree with everything you said, and I think the market finally priced it all in. Putin likes war. War is good for Russia because all their exports are commodities, and the prices of all these commodities go up when there's war or there is uncertainty. And Putin decided that he's not going to wait. He's just going to take over the Ukraine and put his own regime there to make sure that the Ukraine does not join the West or join NATO. And that's part of his legacy of kind of rebuilding the USSR. Remember, he used to be a KGB officer when Russia was still a world power, right? One of the part of the USSR. And now it's his legacy, right? He's 70 years old. He's like thinking about what is going to be written about me in the history books? Did I rebuild Russia, or it just stayed within my borders? So unfortunately, that means a lot of suffering for a lot of people. And frankly, I don't think he's going to stop after the Ukraine. And if the West doesn't do something more serious than just sanctions, we're going to see him go country after country to try to rebuild the USSR.
So I mean, when I look at the markets, I just mentioned all the reasons, all the risks which I thought were priced out of the markets. But I think if we look at the risks that are not yet priced out of the market, now these are the risks that we probably should be paying attention to. The first risk is that this war spreads beyond the borders of Ukraine. Because if it does spread beyond the borders of Ukraine, effectively most of those borders become NATO countries. And if a NATO country gets attacked, it's attack one, attack all. And then the NATO members kind of have an obligation to do it. That's the first risk that is still probably not priced into the market. The second risk that's not priced into the market is a China invasion of Taiwan. That's not yet priced into the market. And the third risk that's not yet probably priced into the market is that the China real estate contagion, which we've only seen one part of, which is Evergrande, now spreads to all the financial institutions and all the other real estate. For me, those are now the three risks that are not priced in. I think all the other risks are priced in. Inflation is priced in, Russia-Ukraine is priced in, Evergrande default is priced in, all of that's priced in. But those three risks are not yet priced in. What do you think the chance is that the war goes beyond the borders of Russia and Ukraine?
Yeah, so one of the reasons I think Putin invaded the Ukraine is because it was not part of NATO, right? So I don't think he will test the waters with a NATO member. I think if you look at all the countries that are bordering Russia, any one of them that is not friendly to the Putin regime is a target. So we're talking about, he's not going to go into Poland, he's not going to go into the Baltics. But like we saw him before, going to Georgia and basically force changes over there, or other countries on the border. So Moldova is a good example. That's a country that I was actually born right there on the border between Moldova and the Ukraine. And that is an example of a country that could be taken over next. And I don't think, again, the West is going to do much to protect them. So, but I think none of that is going to, I think the big event is already priced in. What we really have to ask ourselves is why Bitcoin is not behaving, is not correlated to the gold, and rather it is moving together in tandem with the NASDAQ, right? Why can't we decouple from the NASDAQ and really represent more of that safety / doomsday insurance policy that we think Bitcoin is? And my view is that the marginal buyer of Bitcoin is the same marginal buyer of Tesla. And until we kind of switch the mix, we have more institutional and more hodlers controlling the price, and we're going to be correlated to the indexes instead of to the basically being decoupled from what's happening in the markets.
So who would you say, what kind of buyer would we need to bring in to decouple it from the market? If you're saying we know that that these buyers are actually institutional buyers, and I mean one big sign that we know that these are actually institutional buyers and not retail buyers is the Coinbase volumes. So yesterday Coinbase reported their results. They beat expectation, which was amazing. But they also came out with some very interesting insights. And the one insight was that institutional trading volume was 371 billion. That increased 60% compared to the previous quarter and was 68% of their trading volume. So you're saying that, we were all waiting for the institutions to come into Bitcoin and crypto. And now we've got in the US 70% of the trading volume actually coming from institutions. So are these not the same institutions who would be looking for a safe haven?
Well, trading volume doesn't represent hodling, right? Trading volume represent market making, arbitrage. There's a lot of different activities institutions do. We obviously are the largest lenders to these institutions, providing liquidity and basically earning yield from the fact that these people trade. But what you need is really, you need 100 Michael Saylors, right? So you need people that buy and hold, and that they're in the market when prices go down. Like you showed in your chart before, when Bitcoin goes down 3 or 4 times more than the NASDAQ, that tells you that there's no institutional support. Normally, you would see when you see Amazon go down, you see institutions step in because they know that Amazon at a 10% discount represents tremendous value. And that's what we're really missing here. We're missing that marginal institutional buyer who steps in to create new bottoms. So what we're seeing instead are bottoms where, like we had last time, was 29,000. This time it's 33,000. So the good news, again, we have higher lows, but they're not represented by very high volumes, which is not showing us much conviction.
All right, I want to show you a chart. This is the chart of previous corrections. This is the Dow Jones. This is the S&P 500. This is the NASDAQ. And this is a visualization of this correction relative to previous corrections. And you can see that we had the COVID Black Swan event over here, which was, I mean, that was a serious correction. And then you go all the way back down and you can see pretty much go back. This was a very serious correction. I mean, if you look at it, if you take it from November till today, no matter which way you look at it, it's a serious correction. In terms of Bitcoin, it's a 40 to 50% correction, which is on the scale of one of the biggest corrections in Bitcoin's history. In terms of the NASDAQ, we've had a 20% drop, 25% drop, which is, again, on the scale of drops, one of the biggest that we've had in history. Do you think that we've now seen the bottom? We've had that panic situation, and now it's time, and now the markets will start to rebuild.
Yeah, so I tweeted about that yesterday, that I do think that this will be the bottoms. We may retest this bottom, but this is the bottom for the NASDAQ. I think the tech stocks took a huge beating. We don't see it that much in the index because Apple and some of the other heavyweights are down only 10%, but many of the stocks are down 70%, right? So for example, Shopify, I own Shopify. I bought it recently. It's down almost 70%, right? So it was down yesterday. It was down 70%. I bought it because it was basically a free, you were getting all the upside for free. I also bought MicroStrategy because it's cheaper to buy MicroStrategy than to buy Bitcoin. You're getting a 30% discount on the assets that Michael Seller already bought for you. So there's a lot of, I think, opportunities in the market, mispriced stocks that have exceptional business, right? And the market just hates everybody right now. So if you're not Apple, if you're not Google or Amazon, the market hates you. So the tech stocks are down over 50% on average, right? If you exclude the top stocks, and if you look at the ARK, it's down, I think, something like 70%. So I do see this as a bottom, and I think Bitcoin, again, the good news, and I think you mentioned that several times in your shows, is that when Bitcoin goes down, it might go down 3 or 4 times, but when it goes up, it also goes up 3 or 4 times as fast as the market. So if we're going to see a rebound here, which we expect, we expect the Qs to trade within this range of the previous high and yesterday's low. You can expect Bitcoin to do 4 times as well. And that's why I think we're still going above $100,000 this year.
What would be the catalyst for the run? Do you agree with me that the Fed now can't increase interest rates as aggressively as that they want, that we're also going into a period of much higher inflation than the 7% to the 7-point-something% that we saw? Do you agree with me that could actually be a catalyst for the next run, the fact that the Fed has to be lenient and the fact that assets are going to reprice again because of inflation?
Yeah, I definitely think that we will probably still see 4 to 5 rate hikes because the Fed is not comfortable keeping rates at 0. So I think we're going to see us go to 1 to 2%, which is kind of normal state for for the markets. And that is not really, I think, what impacts Bitcoin. I think what you need to see in Bitcoin is continued institutional adoption, continued retail adoption, no major disruptions. So, for example, if Europe decides to halt or put really strong restrictions on Bitcoin or on other crypto assets, that would obviously slow down the adoption. It's not going to take us backwards, but it will slow down dramatically the adoption. So we need to see us migrating from early adopters to mass adoption. And
so I want to touch on a point there. Alex, specifically around Coinbase. And Coinbase is highly correlated to Bitcoin, as you can see. That's the charts of Coinbase and Bitcoin. They reported their results yesterday. They smashed their expectations, which was very positive for crypto, a very positive sign for crypto. But there were some cool things that came out of it. One is that 70% of their volume is now in institutions, which is amazing. We talk about, Brian Armstrong said he doesn't think that we're going to enter a crypto winter, which is another positive sign. He said that 2021 was a very rare year, but more importantly, he gave a stat, and the stat said that 1 in 4 US households now own crypto. 25% of US households now own crypto.
Yeah, and I totally agree with that. I think, again, the adoption is definitely accelerating. I've been traveling in the last few weeks, and every commercial is a crypto commercial, either for an ETF or an ETN, or So I definitely think that the major players are spending tremendous amount of money to kind of get market share, and all of that is getting again, massive adoption. So we're gonna definitely go from that 15 to 20% adoption to over 50% adoption. And the good news about that is also that that influences a politician in Washington, because when you are in Congress
that's big. That's big.
and you realize that the only way for you to get reelected is to say good things about Bitcoin, and we're seeing it already from mayors, and we're starting to see it from governors, but I think it's going to percolate to basically everybody, right? You will not be able to get reelected next year if you are saying bad things about Bitcoin.
Yeah, Alex, it's been fucking amazing having you back, bro. And everyone in the whole chat is going crazy. Wow, welcome back, and we love it. So we need to keep you on here more often. We've got a big banter coming up very soon, so we'll get you back on that big banter. I think that would be amazing.
And I'm happy to also come in at market tops, not just at market bottoms. So I'll see you next time.
All right, Alex. Much love for you, my friend. Much love from the banter community. And banter community, if you're not Celsians, then you should also be part of the Celsius community.
Hodl on.
Hodl on, buddy. Hodl on. Thank you. Alrighty, so that's it, guys. I think that is the thesis for a super cycle. I quickly want to bring in the man Hustle to tell us about the gaming show tonight. Hustle, your studio's looking legit, bro.
Yeah, once we get the wall behind me sorted, we'll be good to go. But we got a lot of news today. Some mass adoption over in Japan on the NFTs. We got Rakuten launching a NFT platform for marketplace for sports and entertainment. I mean, they're obviously huge overseas and internationally. And then we have the biggest bank over there as well, getting in on NFTs. So we got a lot to cover today.
Mitsubishi Bank. It's Mitsubishi Bank.
It is.
Mitsubishi Bank.
What's going on, Sheldon?
Yo, brother. Congrats on the new place.
Appreciate it.
Yeah, I love it, dude. I love your little neon sign. And what's it? Is that a Lamborghini? Not before me, bro. Not before me.
It says hustle. It says hustle on the license plate. You got to speak it into existence.
Yeah, I love it, brother.
We're gonna do some call-ins. What do you guys think? You think we should do some call-ins Friday afternoon?
Let the communities decide.
Guys, you want to do some call-ins? What do you think? Yeah, let's do 15 minutes of call-ins. Drop the StreamYard link on my Twitter. I'm at CryptoManRan. Sheldon, if you could just retweet it, Hustle, if you could retweet it, we'll also drop it in the description link. Let's go. We've got 10 minutes. If you guys want to join in, tell us how you're feeling, ask us a few questions. Come on, let's do it. Let's talk about it. Let's do it. In the meantime, I'm going to start answering questions here from the chat. First question is, Ran and Sheldon, what do you think of the AIOZ network?
Okay, Ran, you go through the fundamentals. I'll look at the chart.
So for me, I love AIOZ. I think it's part of the Web3 narrative, which is decentralized web, decentralized computing power. I do love it, but it's not a play from today to tomorrow. It's a small cap coin. I'm very long. I have a lot of AIOZ. It's one of my big strategic small positions. I'm going to continue to hold it because I know the team are doing exceptionally well. Remember, if you want to join in, if you want to call us, you got to go to my Twitter.
It's on. Yep.
There's a link there. You click the link, and that will bring you into the chat. We've got 10 minutes to spend with you guys today, answering your questions, connecting with you, anything that you may want to know about the community. But you got to have a camera on. We're not talking to phones. We're talking to cameras. Okay, people here are asking when Banter bags. We are long 100x subs. No, the Banter bags at 700,000. 700,000. That's when we're doing it. Okay, let's see. People are coming in here. We got Matis. Where you from, bro?
Hello, guys.
brother.
I'm from Germany, and I have a big question to Sheldon. So it's my first year in crypto. I joined crypto space October, I think, and I'm honest. I got addicted to leverage trading as Sheldon, and I saw your story, and I'm like, okay, he maybe is in the same space like I. And yeah, I mean, I got addicted to leverage trading and lost my whole money. I think it's about 10K, and now I'm sitting on near to zero, I think. But I learned a lot. I made me a rule list, and I think that's very important for me to stick to that rules. I learned a lot, and now I'm quite sure that I could make it, but as I said, I have not much money right now, and my question is, what should I do now in my situation? So I know that Sheldon went to the same way.
I know, brother. It's a tough one. So me as well. I got addicted for about six months. I think I was addicted. I was very addicted, actually, and it worked well in a bull cycle. And I also I compounded my accounts, and I literally, after 3 to 6 months of hard work of building an account, like 2x, 3x, 10x in the account, I literally lost 3 times overnight, 95% of the cash. And then what I learned was, like, obviously leverage is it's definitely gambling, but if you can learn some sort of basic structure with it, like, you can make a lot of money, because now if you get really good at something. So what I did, but is, you haven't succeeded spot yet, so you were never ready for leverage. So the thing is, the way I did that is, if you have $1,000 left, what my goal was is, if I could make $100 off of my $1,000 in spots, then I'm allowed to take that $100 and then go 5x on leverage. And I started off with lower X's. But what I learned to do was to never trade leverage with my own money. I learned to take my main accounts, and then what I thought is, let me trade this once. I need to build a leverage account. I should never take money out of my account. So I would make a successful trade. If I made a successful trade on my spot wallet, I then had money for a leverage wallet, and then I could learn to basically make $20 a day. Now, the only reason I'm explaining this, go for it, brother.
Why don't you do a leverage trading course for the Banter?
I actually am going to do it, and it's not for the sake of promoting leverage. We're not stopping it right now, and it may actually change a lot of people's lives if they really actually take it seriously. The problem is, it's okay to be rich in 1 year, and I thought 3 months leverage is going to make me very rich, and it's just the mentality, brother. We are all naturally born with a gambling mentality. The more you can get the easiest option.
Let's do a responsible leverage course. And I know that sounds crazy, responsible leverage, but there are ways to use leverage responsibly. Sheldon, you put it together. We will launch it in 2 weeks. How's that?
I agree. We're going to do it. And you know what it's going to do, brother? It's not about the start of that course is going to be real. It's going to tell you this thing will destroy your life. It's actually so bad in that way. But, there's other ways. If you can just learn to build off and you make it not your money anymore, why can you get good at a video game? How many guys can jump onto any video game and they can make so much money in the game and they can do so well in the damn game, and then in life they can't do it? It's because they're emotionally attached to the thing. So I learned, if it's not my money, it's going to make my decisions a lot easier, and I'm just going to treat it as a damn game. And just by learning, you never learn spot wallet first, and that's why you're struggling with leverage. You jumped a step, you missed 1 and 2, and you went straight to 3, and that's the only reason. But brother, how quickly you can get it back? You paid for those lessons. Each lesson, you paid $1,000 for that lesson. You paid another one. If you repeat it again, that's your own fault. But you had to hit that road, and now you just got to go back to level 1. You didn't pass level 1. That's why you're not succeeding in level 3. Do you know what I mean? And it's just, I promise you'll make it back very quickly, brother.
We'll do a leverage course. We'll do it in 2 weeks. In the interest of time, I've got a whole lot of other guys, and we've got to end the stream in 10 minutes. So look out for Sheldon's course. I'm glad you asked that question. All righty, let's get Simone
from Italy. How are you doing, guys?
Good. How are you, Simone?
Fine, thanks. I have a question for you, Ran. What do you think about hate or HTR? I don't think you ever mentioned it, and I think it's a very good token, nice project.
Don't know enough about it to have a real opinion, to be honest. So I know about it. I know about it, a little bit about it, but I don't know enough about it to have an opinion. So good one. I will do research, and I will come back to you in a week. How's that?
All right, thanks.
Cool, man. All right, let's go into the next one. Oscar, how are you, my friend?
Hey, guys. Hello.
How are you?
Hello.
What's up, brother?
Where are you from?
Mexico, but I live in Belgium.
Ah, amazing. What's on your mind?
Couple of questions. So first one, you speak earlier about the Moonbeam. I was buying, not at the top, but I was dollar cost averaging buying, and suddenly it went down to $2, and I just stopped buying. Do you think it's safe now to start piling up?
So Moonbeam was very overvalued. In the beginning, when it launched, it had a $9 billion market cap and an $11 billion market cap. And I don't know if you remember on the show, but I said I just can't get myself to buy Moonbeam at those kind of market caps. It just doesn't make sense. It doesn't make sense. And then two things happened. There was a massive VC token release, and that crashed the price to $2.30. I missed the $2.30, and I bought some at I think $2.40 and $2.50 on the recovery of that. And then I bought some more yesterday, because again, it was close to $2. I can't remember the exact number, but it was around $2. And I think at a $2 billion valuation, I'm a buyer. But at an $11 billion valuation, I'm not a buyer. So it's still very risky. But I bought at $2.50. I'm not telling you to do the same. I'm just telling you what I did.
All right. Thank you. And,
cool, man.
Hasselt, quickly. So my son and I, we love playing Thetan Arena. Actually, he's there waiting for me to play. We love the game. Tokenomics is a bit rubbish, but we have seen that they are doing some promotions, some activities that is slowly rising up the price. So, I mean, we just keep enjoying the game. I hope they will recover.
Yeah, and it's unfortunate, right? Like you just said, like your sons love the game, and that's unfortunate because it's probably the most fun game, legitimately, that's out there right now, and it's easily adoptable, and it's unfortunate. And I see that they are trying to make progress, so let's hope that does turn it around a bit and bring some players back, because it's a great game. It really is.
You should be an advisor to the Thetan Arena.
I've literally reached out to them and got no response, because I had some ideas for their economy that could probably make it better. Thetan Arena, if you're out there, DM me.
All right.
Great, amazing. Thanks a lot. Let's take some calls. Thank you, my friend. All right, Matt, welcome, buddy. Where are you from?
What's up? I'm from Miami. It was great seeing you guys at the conference a month or two ago. All right, so let's talk a little bit about good old Toom, T-Share, 2 OMB, 3 OMB, 3 Share. Like it seems like it's been insanity this last few weeks with what's been going on. So what's your inside take?
I said it. I remember I said to you, there was another caller that called in and he said, what about all these Toom forks, 2 ARM and 3 ARM? And I said to you guys, the only one that I'm playing is Toom and T-Shares. That's the only one that I'm playing. And at the time, I got massive FOMO because the price went to 20,000 to 19,000 and 15,000. And if I look now at the 3 share price, the 3 share price it was on last week's show where the guy said, oh, why are you not investing in 2 share and 3 share? Don't you? And I said, no, I'm only backing the main game. Here we go. Now we're back. Okay, it's up 150% today, but hold on. Let's just look at the 30-day chart. This is where people were buying it. Look, the investment in a Tomb T-share type token is already risky. You're buying a token that's pegged by sentiment and algorithms. It's risky. To take a risk investing in a project where you don't know who's behind it and there's no deep pockets behind it that are incentivized to keep the peg is, in my mind, ridiculous. I know Harry. I trust Harry. I know how much money Harry's got. Harry's a billionaire. And I know that Tomb is his baby. So I know that if Tomb and T-shares lose money, he's going to round up a lot of his troops and he's going to get the peg back somehow. So I'm in. All these other ones is a matter of market timing. And you know, like you can see, you catch the market on the wrong time. That's what's going to happen. That's what's going to happen. You see that? That's what's going to happen. So I'm still playing this. I'm still long. It is risky, but that's what I'm doing.
Awesome. And then Hustle, I'd love to hear a little bit more another time about the Gala music nodes that you had mentioned, I think, on a previous stream. So
yeah, looking forward to more info from them about it, because right now, like, I think when you purchase it, the download's not available. So I think when the sale ends, they're going to push the download to your computer to where, because I know you can't run more than one node on each device, for example. So I think once the node sale concludes officially for the initial round, they will roll out the software for all of us, and that'll be the next stage. I'll definitely follow up, though, because I did get me a music node because NFT music is so appealing. If Snoop Dogg's involved, you know, he could bring so many different younger artists into the space just following his footsteps. So I'm very bullish on that.
All right, let's do one more call before we end it. Wow, there's so many people here. Who do I want? Okay, let's go. AJ, welcome, buddy. Where you from? AJ.
Hey, man. How's it going, man? From South Africa, so actually quite close.
Oh, okay, nice. What's up? What's on your mind? You got 2 minutes. Yes.
Yeah, we can hear you, brother.
Yeah, cool, man. I'll be quick. Again, big thanks for all the content you guys are creating. It's amazing. So just two things. I really am a big fan of Vinny Lingham, and he dropped a coin the other day in one of your banter sessions, Eden, and I was wondering about that, and maybe just on a follow-on. You know, he's also got Civic, so just want to get your thoughts on that, because again, Vinny is a great guy. Just I know you guys aren't obviously giving a lot of coin advice on the stuff that he's invested in, but I'd love to get your thoughts on those two coins.
All right, so very quickly, I don't know much about what's going on at Civic. I haven't kept in touch with them for a long time, so I'm not going to comment much on that. Eden, miner extractable value is a big narrative. Eden is one of the players in miner extractable value. There are a whole lot of others. Manifold is one of them. What's the other one we bought, Carl? Fold, miner extractable value. There's another one. Anyway, Mist, Alchemist. That's it, Alchemist. We like the narrative. It's a risky narrative. I do have a small position in Eden. I'm not going to put more in right now because I just think there's better opportunities. Simple as that. Alrighty, guys, that's it. That's all we have time for. Banter fam, love you. Shaldino, love you. Hustle, love you, bro.
Love you too, brother.
Hustle, very upset, bro. You can bring your dog. You can bring your dog, bro.
That's not the problem. I'm between a couple of things. I can't leave. If I was to put a few weeks on hold here, I would be drastically behind, scrambling, potentially paying tons of fines and fees. So yeah, we don't want that to happen.
All right, buddy. See you next week. Banter fam, we'll see you guys again next week. Until then, stay safe and trade well, my friends.